At the moment, neither tax. To my point, I don't think we need another headwind at the moment, right? Like, it's still a pretty shaky global economy out there. We are a rounding error in the grand scheme of things. Let's make it easy to do business. I'm not saying no capital gains tax ever. I'm saying just let us get some good times before we get the additional taxes on top.
We are back in your life, and today I've got Mike, I've got Matt. If a tax is inevitable, wealth tax versus capital gains tax. Lads, the comments section. Promise me you won't look at the comments because it's not going to be nice.
Oh, I don't when we do these.
Yeah, I just anytime I get anywhere near text on a podcast, I'm not allowed to the comments.
Yeah.
And fair enough too.
Yeah.
Yeah. And when you're up to 75,000 people a month watching this thing, the comments, not everybody's going to agree.
That's a lot of people that we can annoy.
Yeah. So let's break it down. Mike, maybe just a quick reminder, because I think a wealth tax, so the Green Party are probably the one in New Zealand that campaign around a wealth tax.
Yeah.
But a wealth tax could be cut in lots of different ways. What is the way that the Greens have been campaigning around a wealth tax?
In short, right, a wealth tax. Basically what the Greens have proposed is they're going to put a 2 to 2.5% annual tax on any assets above 2 to maybe 4 million. There's a little bit of ambiguity around the details here. So effectively, that means that they could tax unrealized capital gains. Matt, just quickly, what is an unrealized capital gain and how would you tax it?
Well, I know how they tax it. So an unrealized capital gain is a gain that hasn't been realized. So a real good example would be a property that you bought for $1 million, it's now worth $2 million. Mm-hmm. You are effectively $1 million better off on paper, but it's unrealized because you don't have that cash.
Yeah.
I think, for the record, and I'm going to get got at in the comments, a wealth tax is a terrible idea for so many different reasons, which I'm looking forward to James asking me about.
Yeah. So, before Matt goes on a rant, 2% on a $2 million asset, is that $40,000 a year?
It's 40, yeah.
So if we tax per annum a $2 million asset by 2% a year, that's $40,000 in tax in a property scenario that would be delayed until the asset is sold, but it's building up. Treasury estimates it could be $4 to $7 billion a year, depending on the threshold. And people be like, wow, $4 to $7 billion a year. Guys, we could build more schools. We could build more hospitals. We could get rid of the road cones. We could pay for more road cones. Well, hold up. Treasury and the IRD warn the economic costs could be significantly larger than any capital gains tax, wealth tax, whatever you want to call it. Matt, what is the issues with a wealth tax?
Yeah, so I think the primary issue is that you are effectively taxing people's financial well-being. And it's a really broad scale, right? So you've got your homeowner who has basically a bolt hole for retirement, for example, that's getting taxed. You've got business owners and investors and people who are trying to get ahead. And I think any time a country goes too far in taxing those people, you don't get good outcomes in a country if you disincentivize the people that are actually doing things. And then the third part of it is I don't really like the idea of accumulating tax on an asset, because that effectively goes on someone's personal balance sheet as a liability. And every year, if I own a $1 million house and I've got $10,000 a year accruing in a tax bill, how long, you do the math, how long can I go until I sell that house and I have nothing?
Yeah.
And it's just a terrible idea. Give me the capital gains tax.
Yeah, well, we will get to that bit. But you're right. You look at it over the past, say 3 years with property, for argument's sake, right? And you're taxing an asset 2% a year that's going down in value. Yeah. Once you actually tax the asset and you factor in inflation, what's the point in doing anything?
Yeah.
Yeah. I think the other thing around that specifically is the avoidance, right? And wealth taxes globally are notorious for being avoided, right? And the other thing as well is okay, well, if I've got this never-ending tax bill on this asset that clicks into play the moment that I sell it, I'll just never sell the asset.
Yeah,
Or chuck it in a family trust and just leave it in there.
the worst thing is it kicks into play the moment you buy it.
Yeah.
Yeah. Well, I mean, they do there's a lot of warnings around, I guess, how much, there is avoidance around these sort of taxes if they get put in place. The accountants and the lawyers probably win.
There is an upside always for professionals like us.
Yeah.
But it has to be balanced with the wider good of a country. And I think it's really telling that lots of countries around the world have put it in and then backtracked.
Yeah.
And I just look at it, a wealth tax is exactly that. It's a tax on prosperity and it effectively taxes everything. Capital gains tax, it is a very different creature. We're going to talk about it shortly, but it's a lot narrower. And also the key difference is that one tax is accumulating over the life of the asset. The other isn't realised until it's sold, and it's actually not accumulating. It might be something that you have to think about, but it's quite different.
Yeah. Because you kind of go, well, if I'm not paying tax until I sell the asset anyway, what's the difference? But actually the difference is you're getting tax based off the performance of the asset opposed to just a blanket tax irrelevant to the performance.
And then, all this stuff is never as simple as it seems when it gets to policy, right? What are they going to have to exempt? Are they going to tax retirees with no income? Are they going to tax farms? Probably not. And then we start getting into this whole equality issue, which we already have seen when the capital gains tax policy got announced. It's like, if you're going to do this stuff and not disenfranchise a whole country of people who are trying to do better and lift the tide of the country, then you have to treat everyone fairly.
Yeah, for sure. I mean, you did mention before around, we wouldn't be the first country to give this a crack. Sweden, Denmark, Germany, and France, they have all implemented a wealth tax and then abolished it because of low revenue and high avoidance. So you do look at it and you go, it doesn't work. What do you think, Mike?
I just don't see a case where this improves equity or equality in the economy without creating some huge distortions and basically netting out any potential. I can't see a way in which this works fairly and improves the economic conditions in the country.
Well, let's break that down a little bit because we do talk about equality, right? So we are taking money from rich people, and then the idea is that we can redistribute
Not necessarily. Are they rich?
Because wealth is a term that is basically the difference between what you owe and what you have.
Yeah.
And many people have wealth. A motor vehicle, for example, if your motor vehicle's worth $20,000 and you have no debt on it, you're worth $20,000.
It's a really important point there, right? You're saying we're taking from the rich. Okay, not necessarily. You're taking from people that have an asset. And that's all. That is the blanket for it, right? Yeah, I know it's worth at least $2 million or $4 million or something like that. That doesn't necessarily mean anything in the way that you're taxing them. So, usually the second bit that people say when they say we're taking from the rich is we're distributing it to everyone else or giving it to the poor, right? Again, I'm not necessarily sure that that's going to happen either, right? So you're going to be taxing assets, and I'm not sure it's going to be fairly distributed throughout the rest of the economy or in a way that's going to make the entire economy better. Because the assumption is that the government can take someone's money and spend it, in an argument, a better way in the economy to increase the size of the pie. I don't see that happening.
Yeah, and the other two bits as well, right, is if wealthy New Zealanders, especially the people with the real money, are going to be taxed more to live in New Zealand, are they going to stay in New Zealand? And then the second component is for the everyday Kiwi who is just trying to get a little bit ahead. Does this make them go kind of like,
what's the point?
What? Yeah.
I know everyone watching this podcast is go, look at these three hypocrites. I bet they've all got assets over $2 million that would be taxed. And that might be true, but we're sitting here discussing what is going to be a better tax for New Zealand Incorporated because we're business people, we're employers. And I like to think actually because we haven't moved to Australia, we have a big foot in the camp here and we want this country to do better. We back it.
Yeah.
I look at this and I go, we will continue to do what we're going to continue to do, but what's this going to do to people's grandparents who have one asset and no income? What's it going to do to someone who bought a house in South Auckland 20 years ago for $200,000 that's now worth $2 million, for example? What is the wider effect? And is this going to be as good as the alternatives? Dare I say it, a capital gains tax. If we have to tax this country more, I think there's better ways to do it.
The more I think about it, the more pros I think there is around a capital gains tax.
Yeah.
So I want to break it down, and we're going to do that after this break. Michael, can you guess, out of the 77,000 people a month that listen to this podcast, what percentage haven't subscribed to our YouTube channel?
I'm gonna say everyone's. I'm gonna say only 5% don't subscribe.
50%. 50% of the people have not subscribed to the channel.
Unreal.
So if you're going, this is all great stuff, we're trying to educate Kiwis to make better decisions, more informed decisions about their money, please make sure to subscribe to the channel if you're enjoying what we're doing. That is going to get the word out more. We can help make New Zealand a better place, make Kiwis more informed, and go and get it. Now, back to the episode.
So, lads, we've talked about a wealth tax, where we're pro, con, for, against. The alternative, which we have talked about previously, is a capital gains tax, which obviously was proposed by Labor really recently. And they seem to think that this is the way to go. So, Matt, just quickly, what is a capital gains tax?
Yep. So capital gains tax is a tax on the gain in capital of an asset over time. It was quite narrow what they proposed, but in most other countries it taxes all capital gains, so shares, businesses and property.
Yeah, and Labor, when they made the announcement recently, they excluded family homes, farms, KiwiSaver shares and businesses and said, nope, no capital gains tax on any of that. They said that it would be around 28% and it would be made after the 1st of July, 2027. So, a bit of an outline as to how the capital gains tax would work. So when we're looking at the two, what are some key things we should be comparing, James?
This is taxed on a profit.
Yeah, there we go.
So I make some money, therefore I pay some tax. And what does that remind me of? Pretty much all tax. So to me, this is like... So in the other bit, right, this tax has been shown to work in all of the other OECD countries and the economy's been fine. Every country that has implemented a wealth tax being like, well, I guess we gave it a shot. Let's go back to a different way.
Yeah, 100% agree. And believe it or not, I'm not anti-capital gains tax.
Not at all.
There's a world where I think we'll have it. My previous gripes about it were around timing. I think New Zealand's trying to climb out of a big economic hole, and the timing of this is important. And then the second part is, if you're going to do it properly, apply it in a way that is fair and equal so that it doesn't just look like another tax on property.
Yeah, 100%. I 100% agree. And my point around the timing, I think, is a really big one. New Zealand has not had the best last 4 or 5 years, right? And that has not been the case globally. A lot of other countries have done significantly better than New Zealand over the last 4 or 5 years. We have got some headwinds. We got slow economic growth. We got inflation. We were just talking about the cost of insurance being up 400% over the last 15 years. We do not need another headwind when we're trying to dig ourselves out of a hole.
Yeah, I mean, we just got to get this thing going, right? We've got to make New Zealand a better place. Fundamentally, if there is more wealth in New Zealand, it's going to benefit everybody. If we're taxing, people in a way that is going to result in people going like, why do I bother doing business? What's the point? Capital gains tax. Hypothetically, you could have a small business owner that goes, I could go and buy a property, or actually because there's a capital gains tax, I'm going to reinvest back into my business, hire another employee, maybe start a new subscription service, which is with a New Zealand company that has a flow-on impact. I think a CGT is...
That's a great point. But then, what also happens with taxes like this is the uncertainty around them happens. So it's that same business owner goes, it only applies to property right now, but what happens at the next election cycle? And we see that with property investors that we deal with at the moment. We had the interest deductibility rules, which were really poorly thought out and cost people real money when they were making losses, which is just the worst part of tax policy. And those clients even now, like, what happens if we get a change of government?
Yeah, people are definitely scared. Even when I was at a couple of industry events because of the time of year, the last couple of days, and there is definitely people going, I don't know what I'm going to do here. Like, I'm really worried about potential policy that could come in and the impact it's going to have on me in the business.
Yeah, I just, I think that train of thought is incredibly dangerous because, like, do you know what happens every 3 years? An election. And do you know who might win? the other people.
Yeah.
That could result in change.
Yeah.
And if you're going back and forth, you actually don't have any long-term plan. Governments change all the time.
Yep.
You're just gonna we talk a lot about it. Like you just got to take action and go and go and go.
I totally agree. And we definitely don't think like that, but that is how people think. And I know it because I get clients already ring me about capital gains tax. I said, we don't make decisions based on governments that haven't been elected yet.
Yeah.
But I think it's a real risk with it, and that's why my preference with it is if you're going to do it, make it apply to all capital gains because that's what a capital gains tax is. That way you get no inequality, there's no ambiguity.
No distortions.
No distortion. You're not incentivized to do this thing over that thing. That way you get a market that works properly.
All right, lads, I think this is pretty obvious, but for a country that is struggling at the moment and we need to increase entrepreneurship, innovation, get this thing moving, where are we going?
Neither tax.
No. You can laugh at that, but I agree. At the moment, neither tax. To my point, I don't think we need another headwind at the moment, right? Like it's still a pretty shaky global economy out there. We are a rounding error in the grand scheme of things. Let's make it easy to do business. I'm not saying no capital gains tax ever. I'm saying just let us get some good times before we get the additional taxes on top. 2021, height of everything. Everyone's making money. No one gives a crap. Yep, throw a capital gains tax in.
Can I just butt in there? Like, why are we a country that's so willing to accept an additional tax? Like, if this was France, they would be marching down the Champs-Elysees.
Burn down the Sky Tower by now.
Yeah. If this was Britain, they would have their tractors up on steps of Parliament.
Yeah.
Like, we as a country are way too apathetic. We're so willing to debate a new tax. We've just gone through this period where we have not done very well locally and globally. Our economy is not doing very well. Productivity's at an all-time low. There's all the stats coming out about New Zealand not that favourable.
People are leaving in droves.
People are leaving, and we're sitting here entertaining one of two new taxes.
Yeah, and people are voting with their feet. People are moving to Australia, right? What, you want to layer another tax on to speed that up?
And it's not like we're not facing rates increases. We're about to get insurance increases. We're about to get a road user charge for driving our cars. We are getting stealth taxed constantly.
They just said that we're now going to be able to charge us tolls on roads that have already been created and paid for. Like, it is just more taxes.
Yeah. So I just think the whole country needs to take a beat and go, why are we even allowing politicians to tax us more when we're conceivably probably getting taxed enough? And maybe there is some productivity issues, maybe the government's overspending, maybe there's other ways that this can go.
I would say that is there ever a good time to introduce new tax would probably be my first point. Second piece is if we're talking about like 2027, that's not now. Third point would be actually, we do talk about, different political parties and our opinions. If you are going to introduce a capital gains tax, Labor's done like a pretty good job in terms of 28%, not backdating it from this date forward, not impacting your home and all that kind of stuff. I think there is a lot of benefit to, if you are going to do it, I've looked at the policy.
I agree with that. Only, as I say, it should just be on everything.
All right, boys, I just want you both to promise me one thing as we wrap this thing up. Do not look at the comments, okay?
Well, let me be real clear. We're team capital gains, right? We're not saying no tax whatsoever. We're team capital gains tax. We just both think, not now, and get it right before you do it.
Matt, we got to get you a t-shirt that says Team Capital Gains Tax.
I'm not going to the comments. I'm not Team Capital Gains. I'm Team New Zealand. And I want New Zealand to do better, and I just think we're taxed enough at the moment.
Yeah. Okay. All right. Let us know in the comments.
Cancelled.
Yeah. Let us know in the comments section. Are you team capital gains tax, wealth tax, or whatever the hell Team New Zealand is? Maybe we get a New Zealand flag behind Matt as an eagle soars past. We'll wrap it up right there. Make sure to give us a review, give us a like, and subscribe, and we'll catch you next time.